Now, folks, let's go over to our man, Mr. Darrell Martin. Don't forget, every trading day here at TFNN, we do live content from 8 in the morning to 6 in the evening. All that content to get right in your cell phone, tfnn.mobi. Darrell has an outstanding show every trading day, 1 to 2 Eastern Standard Time. He specializes in the Nadex platform, and there's no better time, folks, to trade out in that platform. Darrell and I, we have a show on Fridays, 10 to 11 Eastern Standard Time, where we're out there trading it. Bottom line is that you've heard the commercial many times that your trade is your stop. Bottom line is that when you talk about volatility, as we have here, that platform is absolutely phenomenal for short-term trading. Darrell Martin, what's going on?
What's up, man?
How you doing?
These markets are insane. You got to love this volatility.
They are. There is no doubt, folks, okay, that the volatility out here is in Spain. And just something to keep your head wrapped around here for a second, folks. Our markets, okay, we're down like 2%. Right now, the Dow's down 1.8, the S&P's at 1.4, and the Nasdaq's 1.1. In Europe, folks, okay, they were down 2.8 and 3.5%. This thing's not even close, okay? You know, if you're thinking about, you should be thinking about keeping stops in rather than going in and dipping your toe in here. That's the bottom line.
Yeah, it's if you don't have something that can help you really protect your account, I mean, it's very dangerous to trade right now.
Yes, there's no doubt. I mean, unless you're a day trader, you know, then.
Oh, yeah. There you go. That's when you're like, finally, it's back.
Yeah, that's a fact. And what you do have, folks, is this, is that the velocity of these moves, you know, and the XLE alone, the XLE is saying, and this is like sick, folks, okay, but guess what? You know, the February 5th benchmark was there. That's getting there a lot quicker than I thought. I mean, you got to remember something. Right now, we're down 170 points from the high, S&P points. And, you know, it's not another stretch to get down 500 more. So, you know, it's like...
That sounds so insane, but...
It does. I was coming up in the elevator today, you know, and actually when I was going home last night, I'm saying to myself, you know what, man, every time this happens, I know, I play this over my head, and I know it sounds insane. And then, and all of a sudden, it just happens, you know? And
yeah, and I'm looking at this, and I mean, we're busting 3 deviation levels, you know,
yeah.
which is there's a 0.3% probability of that happening.
I can't imagine how many deviation levels the bond market busted today.
Oh, no kidding. Yeah,
you don't have enough deviation levels on it, probably, right? Yeah,
2%. I mean, that thing was just flying.
Right.
So
yeah,
but you never see moves that big on the bond market.
No, I don't believe I've ever seen a move that big in one day. I don't think I have. And I trade bonds a lot, you know, but I don't think I've ever seen. I know I haven't seen the 30-year go 6 points because I always like trading the 30-year because what happens, folks, is that, you know, you're only putting up a couple grand and, you know, you're really looking to make $300 or $400. You know what I'm saying? You know, because the 30-year used to move real slow. And the way
just so you know, there is no deviation level for the bond today. You were right.
Yeah.
So, I mean, up at 143.31, we were at 3. So, I mean, we literally made like 6 or 7 deviations. It's just like one of those, like, black swan events that would have been a beautiful ride to be in. I wish I would have been in it.
Yeah. I can't imagine on the Nadex platform. It must have been just absolutely phenomenal. You know what I mean?
Yeah, there's premium everywhere. It brings us some interesting stuff on the Nadex platform when you're trading, because you're trading options.
Yes.
And a lot of traders have not had the chance to experience this kind of implied volatility yet.
Right.
And my guys, looking at the VIX over here, and I mean, it broke the high of this year, last year, and the year before today. I mean, it's busted all the way through. We're back to 2011 levels right now.
Yeah. On
implied volatility. And, you know, traders get in there, and like on a binary, or really on any option, like obviously premium goes up.
Okay.
When implied volatility, like you can say when the VIX goes up.
Sure.
You know?
Right.
Okay. And so when that goes up on a binary, it's going to push all the prices towards the center. I had a trader in the day, and they were like $1 away from taking profit, and they still took profit on the trade. They had a profit by the end of the day.
Okay.
But they were so mad because they were like $1 away from taking profit. Okay.
Yeah.
And then this IV spike happens when it gets really choppy around lunchtime. You know how it flew down, flew up, and then it started like zigzagging like crazy?
Right.
And that's when the IV got really high, because then it's like, what's going to happen? And all of a sudden, even though the market was going in their direction, the price dropped from like, I mean, it was like at 94 or whatever, dropped down to 75.
Yeah.
because the IV got so high.
Right.
And so it was a reminder. It's like, hey, price isn't the only thing that controls the price of an option.
Right.
The most important factor in all option trading is that Vega, or implied volatility, is the biggest impact on any kind of option that you trade. It'll have more impact than anything else.
Yeah.
And so the good news is they were right on the trade. It still went the right way. They still got their profit, but they're like, what? Because, I mean, it just dropped like $20 on them, and the market was going in the direction. And they're like, what's going on? And that brought me back to the flash crash days. We talked about this before. And I'm in there. I'm going short. I'm really happy.
Right.
But I also have some calls on hedging my position, okay?
Yes.
And I took profit. I'm like, I can't believe I got out. I'm glad I got out because that was nuts. I'm thinking my calls are worthless. I glance over, just expecting them to be worthless, and I'm not going to do anything with them. And I'm in profit on my calls on the flash crash day. And that's because the implied volatility was so huge, it just pumped it up, and I was able to close those things out at a profit.
I remember I wasn't in this 87 crash, but I had 2 or 3 different traders on that I was interviewing, and that's what they were talking about, Darrell, is that they had the same thing. They thought they blew their brains out, but the fact of the matter is, folks, what had happened is that the implied volatility had gone up so high. Same deal. They had calls, and they grabbed them at that particular point before the crush came on. And what that is that it's the expectation, and you've got to put huge amounts of premium in them. Well, they do. The market does immediately. I mean, in a heartbeat.
Oh, yeah. It's just demand. It's like all of a sudden,
So this is good. This is pretty cool then. So I got to make sure that I tune into your show, because now that's going to change the dynamic.
It is.
Yeah, inside the trading the vehicle, because that means that here. Why don't you stay with me for a second? All right.
All right.
We're talking with our man Darrell Martin. We are talking the NADEX platform, and right now we're looking at the small caps, and we're looking at the euro dollar. If you happen to be watching Tiger TV. So tell me what we're looking at here.
All right, well, I got a couple things up for you right now, what's going on. As we're talking about, implied volatility pushes everything towards the center, okay?
Yes.
And it makes it where this is what you call premium collection season.
I know. That's why I'm so intrigued with this. I know, man. I know you're a pro at this, man.
Yeah, and I mean, I teach premium collection all the time, and this is where this comes into play. If you've traded options for any amount of time, or if you do trade them for any time, you'll soon learn that you want to sell high volatility, buy low volatility type thing, right? And I mean, these things keep flying up. I can't even keep them on there fast enough. But, I mean, I've literally went up 3 strikes already on small caps. Like in the commercial break, okay? Buying at 80, and the things are already up at 85, 90, 95. And, I mean, if you look at this trade right here, we're talking about 7 points in the money. And, I mean, before the commercial break, we had one at 10 points in the money. This keeps moving up.
Okay.
But we're talking about 8 points on the Russell. 8 points in the money with less than, like, 25 minutes to go.
That's so sweet.
We could buy the thing for $80.
Right.
Euro dollar, we were looking over here. We had this trade right here, which is literally like 20 ticks in the money you could have bought for $80. Okay, and that's huge. I mean, that has to go 20 ticks against you before you and you could get out at $50. Basically, a $30 loss, $20 profit. But if it stays flat, if it moves down 20 ticks, or if it flies up, you make money. All 3. So in these volatile markets, you can actually make money in 3 directions, and a lot easier because it's further away.
Yes.
And on the scanner, the way I find these, it makes it super simple. I just go in here.
Okay, cool.
And, I'm going, okay, I want to do an in-the-money contract.
Yep.
Okay? And I want one for, we'll just say, cap of 85 that expires in less than an hour.
Right, because we're coming to the end of the market, which is really sweet.
Yeah.
Right.
Let's say I'm bullish. I can click buy.
Okay.
Okay?
Yeah.
And then it'll show me instantly, here are all the contracts on, say if I'm trading Russell and euro dollar.
Yes.
Okay? And I'm like, okay, well, I can buy this one for $79. When I open it up, I can see the indicative price at $29.35. That's a $27.87. Now that's... Or 27.93, 27.87. That's about 10 ticks right now. And I go, there's other ones, especially the further out we go. Let's see, we got this $80 one for 37 minutes from now. And let's see how far away that is. That's 6 points. 6 points in the money. I can buy it for $80. So, I mean, that's the Russell could go against me by 6 points, and I could still be profitable on the trade. I was looking at this, and I talk about iron condors like every day on the radio, right?
Yes.
It's one of the biggest trades I'm going into pretty much every single day. And I was looking at this, and this cracks me up. Okay, here's an iron condor where you can make $40 if you buy the lower spread. Okay?
Yeah.
And you can also make $40 if you sell the upper spread. You can make $80. That means the market will go against you by $8 by expiration today at 4:15, and you'd still be break even. Anything less than that, you're making money. An 8-point width from now till the next 30 minutes. And I mean, I found it in 2 seconds on the scanner. I'm like, you can't find these. Okay, this is like you go into it, you look at it at night to find this kind of stuff for the next day.
Sure.
This is 30 minutes from now, or 40 minutes when I took the screenshot. 40 minutes from expiration, and I can find an $80 profit trade. And, that's putting up like $250 on each side. But as far as on risk, I mean, you're talking about a little over 25% return, in a matter of 40 minutes.
Yeah,
so, and I mean, I used to be happy to make 6% on the Russell in 30 days.
No,
I'm with you. This is 20% on the Russell in 40 minutes.
Right. And this is, folks, as you're hearing this, you can come over to our website at TFNN. You can bring up the Nadex platform. They'll put $25,000 of paper money into it. Darrell's on every day at 1 o'clock. You can listen to him. He'll walk you through it. This is the time, folks, that you want to really wrap your head around this and understand the volatility, how this platform works, where the openings are. Because Darrell and I have talked about it before. When you have a new platform, and this is a new platform, it is an option platform. There's no doubt about that. But what you also have, folks, is we have a platform with volatility, with a new structure, that meaning that they're expiring, just as Darrell said, every couple hours. So when you get a situation like this, and you're talking about 30, 40 minutes, the reason that the implied volatility is so high, folks, because the market has gone from 164 down to 300 down in all of minutes. Okay, so that is built in there. And, granted, yes, it can happen. The other side of that is that as you're trading on that, the probability of time is on your side. And what this comes down to is you want to be on the other side of these trades. That's what it comes down to, which is pretty amazing, man.
Well, and that's one of the biggest things. I saw somebody earlier today, another trader, they were all complaining. They're like, man, the premiums are so high. The break-even distance is so high.
No.
And I'm like, as soon as you say that, you should instantly say, so why don't I go the other direction?
Exactly.
Like, if you're complaining about you not liking the premiums being high, you should be going, wait a minute, why am I thinking as a premium buyer? Why don't I become a premium collector?
And watch what happens here, folks, because the majority are not going to be collectors. That's what you also have happening here, which is really cool, okay? What will happen is that folks that haven't been in the market for a while will just say, as Darrell said with whoever that trader was, the bottom line, you can be right in the direction, but if you're wrong on the implied volatility out here today, you can lose money. That's what it comes down to, which is just amazing. Or you'll break even. You'll think that, oh, my God, we just made a fortune, when in fact you just broke even. It's just because you're buying something when the volatility is just way too high. So.
Exactly. I mean, all I do is I go to the scanner, okay?
Yep.
And then what I do is I just look for what I call inverted proximity or whatever on the trades, and it makes it really easy for me. So like on a buy, I would expect the number to be positive. I look for a negative.
Sure.
Okay, on this, so that type of thing. So I just basically look for the opposite. And I talk about this on the show, so if people tune in and listen to it, they'll learn it real quick. But basically, I look for a negative number on buys and a positive number on sells under the proximity line. And that basically tells me I can buy this for 70 ticks below the market. I can sell this for 7 ticks or 10 ticks or 20 ticks above the market. Well, everybody wants to buy lower and sell higher, right? That's the whole idea.
Sure.
So if you can buy lower than the market and make some decent money, or if you can sell higher than the market and make some decent money, then the market doesn't even have to move and you make money.
I know. It's just a mind blower.
I mean, if it moves in your favor, you make money. If it stays flat, you make money. If it moves against you a certain amount, you can actually still make money. So 3 out of 4 scenarios, the fourth being if it moves against you far, but 3 out of 4 scenarios, you can profit.
You get action.
I like those odds.
No, big time. And the time value's with you. The time value's with you in an extraordinary way, folks. That's what it comes down to. Pretty amazing.
And here's some of these binaries I had up earlier. Now they're all the way up at 95.
Right.
That's pulling up right during the show. There's that one I had up during the show, $95 right there.
Yep.
I mean, they've already taken profit. If you're in, you're out.
Those 80s, those 80 and 78, right? Exactly.
Yeah, we were talking about, 5-10 minutes ago. Yeah. And now they're already at max profit. Take the profit, be out of the trade, and you're done.
It's pretty amazing, man. Look at that thing. Amazing. And this volatility, folks, is only beginning. It's, it's not stopping, that's for sure. Well, listen, man, market-wise out here, too, folks, this is quite a bounce. The NASDAQ just went positive. So the NASDAQ is up 2. The Russell's up 11. The Dow is down 144. The S&Ps are only down 13.
You notice how I buy on small caps, I got sell on Russell over here.
Yeah, no, it's pretty amazing.
I mean, but looking at these and looking at these contracts tomorrow, just for your listeners out there, we got Google earnings coming out.
Oh, sweet.
And every quarter, you know what I do? I go into how I traded on U.S. Tech 100.
Yes.
Which is the NASDAQ 100 on Nadex.
Right.
And I go, and how do I trade the actual earnings release? And it's I may actually get in during the show, or I may explain how to get in later if the setup's not there.
Yeah.
But I'll be going over in detail how to trade the Google earnings release using the NASDAQ 100 or the Nadex US Tech 100 binary contracts.
And folks, Darrell shows on 1 to 2 Eastern Standard Time, no matter where you're listening right now. Bottom line, remember, on your cell phone, on your tablet, on your computer, tfnn.mobi will get you the audio. tfnn.com will get you the TV plus the audio. You'll see the Tiger TV right on the right-hand side. Just hit that. You'll get both with the charts and all of the above. Darrell, man, thank you so much. You have a great one, safe one, and we, no doubt, look forward to the show because you know what's so cool about this, Darrell, is that the dynamic changes quickly, and nothing is easy in the marketplace. We know that. But the reality is that collecting premium is a nice deal because you don't have as much competition,
Exactly.
Yeah.
And, I mean, if you learn that play, I talk about when you go out to the golf course, you don't just bring a putter.
Right.
You have several, you got drivers, you got your irons, and you got your putters, right? You got sand wedges and everything else. This is sort of that sand wedge thing. You don't always get this high a premium.
Right.
But, if you have the sand wedge and other players don't, you got the edge in the game.
There's no doubt. There's no doubt, man.
So you got to pull this one out of your bag and learn how to start using it.
Yeah, no doubt. Well, listen, man, you have a great night, safe night. I'm sure you will. And we look forward to the show tomorrow, man.
All right, man. See you then.
Okay.